Thursday here, brand new coin. It's leg day. Can't skip leg day. Let's take a look at some legacy charts here. Topsy-turvy. When will SPX NDX roll over? Will this be the week? Will it be next week? Will we have an inverted Santa Claus rally? Take a look at the VIX, Dixie, gold, silver, NDX, SPX. Bunch of stocks that are collapsing. Hood, all-time lows. Starting with the VIX though, these correlations historically suggest rises in the VIX give you declines in crypto. Declines in the VIX give you rises in crypto, typically. We had a decent pop in the VIX a couple days ago on Omicron fears or something, and we're still rather quite high, still at the multi-week high here, multi-month high, maybe even on the close at 22. Doesn't look like much, but historically, again, if you look all the way back on the VIX here, it is definitely not happy. Fear index, volatility index, and that is not good for crypto. We're still correlating with DXY here at historic levels, which makes absolutely no sense to me whatsoever. I don't think there's tradable information there, but just tells you that strange weirdness is going on. Historically, I'd say 75% of the time we're mainly negative with the DXY. Gold has been all over the place correlation-wise. Currently, we're still floating negative, 10-year note, floating positive. SPX and NDX here, correlations, these hold extremely positive historically, suggesting that BTC is a risk on asset. So if we go risk off, if the VIX rises, that suggests risk off sentiment, which suggests declines in SPX and NDX, which suggests declines in crypto. So if you're bullish crypto right now, you don't want to see legacy collapse, which is why I even look at this on a weekly basis just to get a temperature gauge of what's going on. Nikkei down here, we've loosely positively correlated, I guess, with Nikkei. Don't really look at that too much, but currently we're holding a slight positive correlation there. DXY, now, for the technical analysis doesn't work crowd, this thing has been telegraphed for weeks, months. It worked out as expected, currently getting held down kind of as expected. This is a probability game. You can call it TA an art, you can call TA nonsense, but it's all about probabilities. Historically, the people in the United States especially have trouble with fractions and probabilities, but where it stands here, where it's getting smacked down is where you'd expect. And if you're bullish crypto, you really don't want to see the DXY bullish. We tend to do best when the DXY is selling off. And this thing could range all of 2022 in the cloud here. And yeah, this is crypto settings. I'm not even going to go into that, but I don't think you trade this as a long on high time frames. I think that ship has sailed. At least I wouldn't be in a vacuum not knowing what this chart was. I don't trade these edge-to-edge moves on the cloud after the fact. I don't expect a Kumo breakout here. To me, this thing needs to reconsolidate and attempt a Kumo breakout sometime eventually in 2022. The expectation here certainly isn't some push to 105. So I think we're safe for now on that front. Dixie related. Gold just flat. I don't think this is really tradable, even on the weekly cloud. Still in the cloud, bearish DK cross. There's not really nothing going on here. Every time it tries to rise up, it just gets smacked down. I don't envy anybody who trades this actively. Same thing with silver. Silver just kind of flat and down. Really nothing to talk about here. It's in the cloud, right? It should be unexciting. It should be extremely volatile. It should be no trade zone territory. So nothing really to talk about there. SPX, however, still hanging. It's like a plane that just goes up and up and up, and eventually it's going to stall. I'm not a mega doomer in general, but this thing has had virtually no pullback since Corona March. And what you don't want to be is long in crypto when this thing does pull back. It is hard to fight the Fed, as they say. So as long as the Fed keeps rates low, money printer go burr, etc., this thing will probably be fine, regardless of fundamentals, regardless of technicals. But when the chickens do come home to roost, I do like 4K or whatever the Kijun level is here. This is a TKC clamp. You can see it hasn't mean reverted this entire time. You can argue that the mean is skewed because of Corona March. I get it. That's all fine and good. But eventually, just as it did in 2016, 2017, we will mean revert. It's really only a matter of time. There's always that looming expectation. If the mean reversion happens sooner rather than later, we'll get a bigger mean reversion. If it happens slower, then you'll get a softer mean reversion. But that's the level to watch. Currently, NDX, very similar. 13888 is that level here. And again, it's only bounced on the weekly Tenkin since Corona March. So it's certainly due for a mean reversion. You know, it's going to be end of the world stuff when it happens, but the reality is it's going to happen. So people are going to act like it's the end of the world and we're going to need bailouts and all this other stuff and whatever. But it's just how prices work. It's how things work. Nothing can go straight up forever. GME, just to shift to the meme stonks. And the reason I look at these week to week is just, again, people trading these in the retail world are generally people trading alts or crypto or SHIB or some other trash scam of the week. GME, so, you know, this isn't doing so hot. My guess is the retail crowd. Also not doing so hot volume-wise, trading-wise. They've moved on. Stimmies are gone, whatever, for whatever reason. Certainly on the bearish side of the cloud there, despite looking decently okay. Now AMC hasn't looked good since May, really, and this thing just fell further and further below the cloud. Certainly not a bullish expectation for AMC. Hood, Robinhood. This is a multi-week now, 4-hour bullish divergence, continuous, just non-stop lower lows here. Probably on fundamentals of things related to what I just mentioned on retail trading. Most of their revenue was from Doge trading volume. That's pretty much dried up. Now this could form some sort of bullish TKC clamp with a mean reversion to like 27. Watch this match some sort of fundamental news event, and then people say, oh, this is why it happened, right? And here I'm the technical guy saying, yeah, well, you know, it's been oversold for weeks, selling all-time lows for weeks with mean reversion potential to the upside. So pick your poison there, but ideally if you're catching knives, you're catching sells from people who are in since the 40s. But this certainly doesn't carry a bullish expectation. I mean, look at the chart, open your eyes, right? It's just straight down since mid-November. Coin also has, this is Coinbase, also has a bit of a bullish div, falling wedge, maybe, back into this consolidation zone of around 225, 250. Also not a bullish expectation, but this could mean revert as well, right? So I think the time to short this was at the rising wedge, not the falling wedge into previous consolidation zones. The reason I look at Coinbase, MSTR, Tesla, Square, those all have Bitcoin on their balance sheet, and they tend to generally be a barometer of sentiment in legacy for crypto. MSTR breaking below all the things it needs to hold above the diagonal support, the cloud, volume just dwindling to nothing here. VPVR levels not holding. So this certainly also does not hold a bullish expectation on the daily, as Michael Saylor continues to buy BTC. Tesla, again, the TA doesn't work, people. I don't know what to tell you, because go to my videos in September on this topic for this channel. It hit the target, pulled back at the target. Adam and Eve, I mentioned last week. I'm not even back padding. I don't even trade this stuff, but if you even know a little bit about TA is the easiest part. There's so many easy things to see and learn regarding human behavior on this sort of thing. TA is the easiest part of it. Clicking the buttons, making the decisions based on the TA is the harder part. The 200-day EMA is somewhere down here around 800. That's where I expect this to retrace to, basically previous all-time highs. Definitely Adam and Eve at the top here, M double top, whatever you want to call it, failed consolidation. Cloud is telling you it's flipping bearish here. Elon's still selling more, right? Now, did I know that Elon was going to sell up here when I made this chart in September? No, I didn't, right? Not saying I can predict the future, but it's weird how this stuff lines up sometimes with fundamental events, certainly. So that looks Dunsky for a bit. Square absolutely shellacked. They changed their name to Block. Don't really understand that move, but RSI downtrend continues. We do have a bit of a bull div here, lower lows in price, higher lows in RSI. No volume support until sub 100. Death cross below the cloud. It's at the pivot right now. The next leg down is certainly 88, somewhere around there. Just does not look. I don't know what look worse, honestly, Square or Robinhood, because this looks abysmal. GBTC below the cloud, below the 200. Not a surprise there. It's just a mirror image of BTC. I think the discount today is somewhere around 15% below spot. Yeah, negative 16%. Again, used as, for me, a sentiment gauge for legacy. What are they thinking about crypto? ETH sits at a negative 3 to 4% discount. ETC, 42% discount. ETH still looks okay. It doesn't look as bullish as it did leading into these past few weeks. As it dips into the cloud here, it still has this diagonal support. It's still above the 200. It's still technically above the cloud. It's still above all this volume stuff. So it doesn't look end of days type stuff. But if this thing pokes below 30, below 28, then I think it starts to get ugly for ETH, but this looks okay here. Then I'll just close with the CME futures contracts. The next rollover is the end of the year, December 31st. Generally, we see a decent amount of volatility because a bunch of OI, open interest, is being sloshed around. And Deribit also has a ton of options expiring December 31st, puts and calls there, as well as ETH on Deribit also has a significant options expiry there. Looks like 2.5 billion or something like that, 3.5 billion. You'd have to calculate max pain. I think max pain for BTC is like 48K based on this put call divide. So that's all for this one. Just, if you're bullish crypto, you got to hope, that's myself included, you got to hope Legacy survives till the end of the year. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.